We're going to look at the Fibonacci retracement tool today, understanding what it is and how to use it. But of course, the bonus feature for today is my lovely mug. Now, Fibonacci is a super common tool. It's probably second only to the trend line. It looks like this, and it's available on the left-hand side, the third icon in TradingView, and it falls under Fib retracement right down the middle. So when we draw it from bottom to top, this is what it'll look like. And these are the numbers that we want: 38.2, 61.8, 50%, and 78.6. These are some of the more important numbers. TradingView will come by default with a couple of other ones, but we really don't care about those ones at the moment. Keep it basic. These are our more common bouncing targets. So what the Fibonacci retracement tool is used for is if we're a bit late to a party or to a stock and we want to identify an entry target. It suits well with our trading motto of buy high, sell higher. So we can see here on example for Galaxy, we draw a Fibonacci and we can see it bounces at the 38.2 and then decides to rally. But of course, the challenge for the Fibonacci retracement tool is to identify what the bouncing target should be. Because you've obviously got multiple bouncing targets here, and it can bounce within multiple ranges of the target. So it's about identifying what's the best entry point to have. Now, the 38.2 is seen as very bullish. You want to use a 38.2 if the stock is very strong fundamentally, because no matter how strong a stock is on its way up, it will come back down, even if it continues the trend. So 38.2 is something that is of an entry point that is hyper bullish. If we expect strong fundamentals, and let's say we want this stock to go to $2, and it's currently sitting at $1, and we've got a pullback target of 38.2, that'll be our entry point for this stock. You obviously want to line up other technicals as well. The more you have lined up, the better. So if we have, let's say, a trend line, a horizontal target, something else to line up with our Fibonacci, that's great. The more you have, the better. But really, Fibonacci can stand on its own, but it is better to marry it up with other technical analysis tools. So how we decide our starting point is we want the bottom of the trend. We can clearly see this trend is starting, and this would be considered our starting point for the Fibonacci. Let's say this stock hit a low down here and kind of just did its own thing a little bit and looked more like this. This would not be your starting point for the Fibonacci. You don't want to pick the very bottom of the chart. You simply want to pick the bottom of the trend that's starting. So in this case, we can see it's quite clearly starting around this point in time. So we draw our Fibonacci tool and we keep drawing it until we identify a 38.2 target being hit. So you can see as we're drawing it, it's not pulling back, not pulling back. Here, it looks like it might pull back. And we pull it across. And we can see it does touch 38.2 here at 35 cents. So that would be potentially an entry target. So of course, if the Fibonacci doesn't pull back, if it doesn't keep pulling back to hit the 38.2, we just keep extending our Fibonacci until that 38.2 is hit. That's when you know your Fibonacci level is valid. So in this case, from bottom to top, we have, let me just draw it here. So we end up hitting a top, pulling back to 38.2. And this is perfectly valid if it hits the 23.6 and pulls back down to the 50% level. So this is a valid Fibonacci level, as long as it hits the 38.2. And it is valid until it breaks out to the upside. Now in this case, it only hits the 38.2 and then carries on. So what we do is we put our Fibonacci level and we start it at the 38.2, which is basically the lowest point in our Fibonacci. And then we just extend the highs and we keep going until we finally hit a point in time where it pulls back to the 38.2. So in this case, rises, and we finally hit a point. It hits a 23.6, comes back up, but then eventually hits the 38.2. And this is going to be your valid Fibonacci level. So we just extend this out, extend the Fibonacci out as long as we need. And this will be our bouncing point. So it rises up, hits 38.2, bounces a little bit and hits the 50%. And this Fibonacci is perfectly valid right up until it decides to break out, which it does at this point here. But let's say you're late to the party. You're maybe a couple of months late and you miss the initial run and you really want to get in on this stock called Galaxy. You can draw your Fibonacci levels and see where it starts hitting the 38.2 for the first time. You don't have to necessarily go for the 38.2. When we look at this at a longer term perspective, all these intraday, or sorry, more like these smaller moves, they all hit 38.2 and rallied, or they hit the 50% and rallied. But this is a bit of a parabolic chart, and you really want to put it on 38.2% as your entry level if this stock's been running for a while. It's unlikely that it's going to bounce off the 38.2, regardless of how bullish it is. I mean, this stock's gone from 14 cents to $2.50. You're not really going to put in a 38.2 entry target for this kind of stock. Maybe the 50%, maybe 61.8%. Both are perfectly fine, perfectly valid. And if there's other technical indicators to line up, then even better. So we try and identify a top on a longer term trend. And of course we hit the 38.2, so this is the Fibonacci level that becomes valid. So we draw it across, and it's up to you whether you want to enter the 50 or the 61.8. A bullish stock, a longer term bullish stock, will hit the 50. A stock that has shaky, speculative, long-term goals or targets would hit the 61.8%. Over time, you'll judge exactly what kind of targets suit you best for your risk tolerance, but for longer term and mid-term trends, you want 50%. That would just be an ideal target for something with strong revenues and just good fundamentals behind it. 61.8% again is, if the fundamentals aren't so strong. And of course, we start our Fibonacci again on a longer term. You can choose to do these shorter term ones if you really want. But if you're a long-term, mid-term investor, you just want these larger charts, and you can see exactly how nicely it bounces between 61.8 to the 38.2. And the initial bounces work best. You're not going to get guaranteed fib hits. You're not going to get these perfect fib targets of, you want to buy here at 61.8, sell at 50, rebuy, sell. That's not what this technical tool really is good for. It's more about deciding where your entry is for a story or for a strong fundamental stock. It's ideal. You can use this for day trading. You can use this for short-term trading. It's particularly good for micro-cap and small-cap stocks that are pumping really hard and you want a pullback target. But if we bring up a chart, let's say, I think this one pumped quite recently. No, it was MTC, I think. Yeah, so look, Fibonacci's aren't a guarantee. You can't just guarantee an entry point here. Hell, it doesn't even really work. I don't think it even works if we pull up the hourly chart. So the Fib tool is not a guarantee by any means. You can see it kind of lingers on the 50% and then it just completely fails. So, I mean, the fundamentals of this must have been absolutely purely garbage, which results in a pump and dump. But if we have more reliable, small cap speculative stock, then we can definitely use the Fibonacci tool. Even something like this. So ZNO, it's only been running for a couple of months. We can draw our Fib tool. So the start of this trend is arguably here where the volume starts. And we draw that. So it's crumbled right through the 38.2. Let's say you trust Zuno Group or ZNO. You think it's a wonderful stock. It's got great potential, strong fundamentals. You'd put it in somewhere at 50%. So $1.15 would be a nice sort of bounce target. That doesn't mean it won't hit the 50%. It doesn't mean it won't do this. Let me just pull up the painting tool. This doesn't mean it won't go up, hit the 50, bounce off the 38.2, and then fail. It's just a bouncing target. It's not a guarantee of anything. It's just an entry target if you've missed this stock and you really believe in the fundamentals. So this isn't a recommendation to buy this stock at any means at 50%. In fact, I think the fundamentals are absolutely abhorrent for this stock. We've gone through the financials beforehand in my previous videos. So really, I'd be looking at a trading parcel at 90 cents here and probably hitting $1.15. So hitting a nice 20% profit on a move like this. So this is how I'd be using Fibonacci's Fibonacci retracement tool for a trading parcel. Would be just hit the 61.8% and sell at the 50%. That is definitely something I'd be looking at doing from a trading perspective of a speculative stock. And we can pull up another stock. Let's say, what else has been running? Say Biotron. I don't think I've really traded this one yet. Yeah, it looks a bit crummy. We've got a horizontal that seems to act more of a support level. So here we have a horizontal mixing with the 50% Fibonacci bouncing target. So we can see that it rises up, decides to bounce a little bit, hit the 38.2, and then just it seems to be failing. Our next horizontal target seems to be around 61.8% or the 10-cent mark. But again, Biotron really isn't a tradable stock. This was more of a story trade for the coronavirus. It just doesn't have fundamentals. It really just doesn't have good fundamentals to trade a bounce and a rally up. So we're not gonna. I don't expect to see this stock to hit up, hit the 61.8%, and somehow end up rallying again. The fundamentals aren't that great. So if you want to know if your stock is going to keep rallying or not, then you better understand what it is you're trading and investing in. So for these small micro cap stocks, really Fibonacci is best for trading. Hitting that 61.8% and just trading between the 50 and 38.2. Fundamentals are typically garbage for these smaller cap stocks and these micro cap stocks, so don't use the Fibonacci tool to invest, please. Whatever you do, don't do that. Right. So a quick recap of what we've covered today. For mid to large cap stocks, the short-term approach, if we caught the news early, is the 38.2%. If something's bullish, then yeah, absolutely 38.2%. And you can use that on probably multiple occasions before it finally does a big pullback. And if you're looking for a mid to long-term approach to these mid to large cap stocks, then you're definitely going to want to avoid that 38.2%. You're just not going to get a good entry. And look, 50% is perfect if you believe there's strong fundamentals. If you're looking at a chart from the weekly perspective or something's been going on for maybe a month or two, maybe 3 months, yeah, 50% is perfect. 61.8% is more ideal for speculative stocks or stocks that have shot up really fast and high, and you believe they've well overstepped their boundaries in valuation, then yeah, it'll come back down to 61.8% and chill. Or 61.8% is used if a stock announcement is not very clear. They bring out some sort of announcement like a deal with another company, but they don't release the financials. So there's some speculation to what the value is for that announcement. Then yeah, you're going to hit 61.8% more likely. So those are your sort of mid to long-term targets and how to interpret the bouncing targets from the Fibonacci level. Once you use the Fib for maybe about 3 to 4 months and you use it every day, and you just apply it to stocks that are currently moving, you'll see in time, you'll get a feel for exactly which Fibonacci targets to use for what bouncing levels and for what reason as well. Now, for the micro and small cap stocks, they act very similarly to the mid to large cap stocks. In the short term, the 38.2 is fantastic if something's pumping, but you've got a much shorter time frame. So you probably have an intraday bounce off the 38.2. You might have something bounce off the 38.2 within maybe 2 days instead of, let's say, over 7 days or 10 days like a mid to large cap would. So 38.2 is great if you've got an announcement that's actually good, right? So if you've got a bonanza strike, you've hit 1 meter of some gold or commodity, and it's whatever, bonanza grade, 50 grams a ton of gold in 1 meter, and it's super shallow. Who cares? That's not gonna bounce off the 38.2 and carry on to the upside. That's gonna drop down to the 61.8% level, and it's gonna bounce off that to the 50, and then probably sell down and collapse. So really, you wanna use the Fib levels depending on the fundamentals that have come out. If there's high speculation or if it's just a headline announcement, yeah, 61.8% is going to be your bouncing target. If there's actual genuine value, which is very rare in a microcap stock, then by all means, 38.2 is the way to go.